Hi, everybody. Welcome to DomainSherpa. Today, we've got an awesome episode of Off the Market Forever with my co-hosts, James Iles and Chris Zuiker, where we focus on the domain space through the lens of end-user acquisitions and upgrades. And today, since it's the first Off the Market Forever show of 2023, we also have Drew on the show, and we talk about the recent Link.com sale, some current trends and predictions for 2023, and a discussion around domain valuation methodology. And remember, if you're listening to the audio version of this podcast, you can also watch the video version at DomainSherpa.com and on our YouTube channel at ds.tv. We have all the past episodes there so you can dig into the largest library of domain-related podcast content in the world for free. You can also check us out on Apple and Spotify and other podcast platforms as well. And as usual, big shout out to Dan.com, the #1 place in the world to buy and sell your domains with a special platform made for domain investors. With that, it's now time to get into this episode of Off the Market Forever here on Domain Sherpa, where all roads lead to domains. What's up, Sherpa Network? Thank you for tuning in today. My name is Jonathan Tenenbaum, a.k.a. JT, a.k.a. Jay On, a.k.a. Sherpa Winfrey, and I'm the host and producer of Domain Sherpa, where all roads lead to domains. Today's show is an Off the Market Forever, which features James Iles and Chris Zuiker as we dive into some of the trends and current events in and around domains, interesting stories and things that are happening from the perspective of end user activity. James is one of the best journalists in the biz, although we're going to talk about his recent career change and a little bit of a pivot. And Chris is arguably, next to Andrew, who's also on the show today, the best domain broker in the biz. So they bring a really insightful and interesting perspective, better than almost anybody else in the world, as to what is happening with the movement of domains, buys, sells, all happening from an end user perspective. So that's what we dig into this show. And since it is the first OTMF show of 2023, we brought on the boss, the man, the myth, Andrew, to talk a little bit about just some, current domain movement stories, as well as we'll talk about some trends and anticipated events and things coming up for 2023. So let's get into that right now. With that, let me go ahead and do my AKs. Oh, by the way, we're all wearing glasses. I wasn't even going to wear my glasses, but everybody was wearing glasses, so I had to put glasses on. Actually, I'm gonna take them off because I don't need them. I don't need them like y'all do. I need them to see far away, but not up close. I'm also rocking my Eagles gear. My Eagles have made the Super Bowl. Let's go. 2 weeks. It's going down in Glendale, Arizona. Let's go. Let's get it. Fly, Eagles, fly. All right, I'm hyped up today. It was like 2 shows ago. They said I was operating at like 0.75 speed. So now I'm
1.25 like, JT.
Let's go. We're going to turn up today. Off the market forever, baby. And I'm just excited to be here, man. You know, especially with James having his recent change work-wise. You know, we weren't sure about the, how often we were going to be able to do these shows. Super excited to have him back in the mix with us, and really excited for today's show. So with that, let's go ahead and do the AKAs. Over to my right, we got my boy Andrew Rosner, a.k.a. Morpheus, a.k.a. the Dirk Diggler, Digital Assets, a.k.a. the Sniper, Bob Lee Swagger. Tell him what it is, a.k.a. Drew. Drew got what I need, a.k.a. every Rosner has his thorn, seeing the world through Rosner-colored glasses, a.k.a. never gonna give Drew up, a.k.a. Blackbeard, the Domain Pirate, a.k.a. Graybeard, the Domain Pirate, a.k.a. Cancel Adams, a.k.a. Level 14. What's up, man?
Wow, I'm excited, man. This is my first what do y'all call this show?
Off the Market Forever.
Off the Market Forever, which is my own term that I
coined and trademarked.
Yes, yeah.
Although
yeah.
I think my in-house IP counsel might have dropped the ball on my trademark registration. I'm not sure about that.
Hold on, I'm making note.
Put that in pile 1. That goes in pile 1.
Do it. I'm telling them
that goes in pile 1.
Go
Off the Market Forever.
I'm gonna tell the staff.
So anyways, I am very excited to be here. Very, very excited. Believe it or not, despite the fact that James, Iles, and I have worked together for several years and communicated for more than that, this is the first time that we ever actually see each other digitally face to face and are on the same show. So I'm super stoked for that.
Yeah. No, James has been providing excellent content, not just for the industry, but for MediaOptions for a long time.
And AKA Young Blood.
Yeah, well, I got AKAs for him. I got him. Let's go. In fact, fantastic segue. We should actually do that one of these days where you do an AKA for some of the other guests. You know what I mean? All right. Well, over to my lower right, we got my boy James Iles, aka Young Blood, aka James Names, aka James Isles of Man, aka Walter Cronkite, aka House of James, aka Blame It on the James, aka I Will Walk 1,000 Isles. What's going on, man? So, I mean, preeminent domain industry writer, consultant is now I don't know the official title, but it's customer liaison for GoDaddy. Liaison? Like, what's the
liaison? No, well, kind of that, but
well,
the official title is Domain Investment Community Manager.
Okay. All right. Yeah. Domain Investment Community Manager. And the idea is that because, look, you've been doing this for a long time. You've been involved in the space for a long, long time. Extremely well respected, extremely well liked. So, just to help kind of bridge the gap.
Which is hard in this business.
Yeah, it is hard. So give us a little bit of the detail on just kind of what what your role is. And, so this way people know when they're coming to you for this, that, or the other, that they're coming to the right place.
Yeah. So this is a brand new role to GoDaddy. It's been one that probably a lot of people might think has been a long time in the making. It is just to have someone on the ground within the domain community, kind of acting like a bridge between GoDaddy and the community, collecting feedback, directing product managers in GoDaddy on kind of what people want from their products. I'd be creating content for them, doing hopefully some data stuff, some kind of insights, but also just helping out customers as well.
Yeah, that's awesome. I mean, well, talk about access to data. That's exciting to just, because nobody has, more data than they do. And and like you said, a long time in the making and long time needed. I think, obviously in the position that they're in, having a real feel of what's going on with their customers. I mean, and it's, in such a unique place, and they picked the right guy for the spot. Just like when they brought in Zuiker with Domain Academy and, put him in the role that he's in, it's super encouraging to me to, for them to have somebody like you in that role. So that's awesome. So
yeah, they're really, honestly, they're investing in the community. I mean, for some people, it might kind of be quite cynical, and people might really question GoDaddy's intentions, but they genuinely love the domain community. That doesn't come across, but there's a lot of love for the domain community.
Well, look, as it's hard to show love. Like the Death Star is a sphere. It's not a heart shaped thing.
Of course, yeah.
But I'm just playing. But I think, look, I mean, they've got to obviously have love for their customers. I mean, that's who pays the bills, and and they didn't grow to the size that they've grown to.
I will say though, under the new CEO, there was a very clear directed pivot from basically the domain investor community is a nice to have, but we don't really care. Maybe even they're an annoyance, to like, we need to better understand the domain investor community and we need to better engage with them. And I think there is a very clear delineation between when the new CEO came in and their sort of, let's say, in level of engagement. There's certain people like Paul Nix who have been in the domain community since the beginning, but the level and the capacity to which GoDaddy was actually engaging in that community, providing tools, discounts, sponsorships, etc., was pretty limited up until that moment. So I think there is definitely credit to.
Oh yeah, no, and look, and I don't think you can discount, Paul's role and, the fact that he's been engaged in the community for such a long time, and like him elevating in, within the company and being a good thing for the domain community. Joe Styler, Alan. I mean, I think they've got, a lot of really smart, good folks that have been, in the room for a long time. And, I think being able to, it's funny, they started, at the conferences with, Bob Parsons and, at the, the registrar stakeholder, stuff. And then, kind of went away from that as they went more and more corporate and got bigger and bigger, right? And then serving more of small businesses and as opposed to necessarily just domain investors. And, and I think there's obviously competing interests there and all that, but it doesn't mean you can't serve it all. And I think then sort of this kind of coming back home is kind of a really neat, like trajectory. So, which makes a lot of sense. So All good.
Yeah, so the engagement thing is really important, especially for me. So, anyone with anything they want to say about GoDaddy, good or bad, anything that people need help with, just kind of reach out to me. I'm really accessible anywhere, really. So just reach out.
Boom. Talk to him. Talk to him.
Talk to me.
Yeah. And like we said, we weren't sure too, like what your schedule was going to look like as far as your ability to be able to, hang out with us on here. And the fact that you're able to do that is really cool. And, so hopefully that can be helpful, across the board, helping people, connect and, get info, share info, and, let their voice be heard in and through you. So I think it's all good stuff. So cool. Well, let's keep it moving. I got one more AKA to do. We're not even out of the AKAs yet. Below me, we got my boy Chris Zuiker, a.k.a. Zuiker's Island, a.k.a. World War Z, a.k.a. Zorro, a.k.a. Noah's Arkansas, a.k.a. we ain't in Arkansas anymore. Dorothy, what's up? All right, what's up, man? How you doing, Chris?
Boom, boom, boom. Let's get this show rolling. Love it.
So, yeah. So, all right, well, look, now the AKAs.
Check this out real quick.
Okay, we got
this. Oh, you get to do screen sharing for a second.
You're going to share. Okay, hold on. You're going to share on show. All right. That's all right.
Let's see. It might go bad.
Close all your tabs.
Oh, look at that.
Wow.
Look at that young, fresh face. You know what I'm saying? Drew, look at that with the man, the myth, Bob Parsons. Let's go.
That was it. That's the throwback.
Yeah.
What year was that?
I mean,
oh, man. That's like 2000. Let's see if there's any metadata on this picture. Hold on.
Is that like traffic? Like when was that from?
Yeah, that was probably. Well, no, I don't think that was a traffic. I think that was what was domain sponsor this thing called? Domain Fest.
Okay.
I think there was
Sure.
a Domain Fest. 2011. That was February 6th, 2011.
Wow, 12 years ago. 12 years ago, almost to the day, So it's time flies, man. But yeah, that's what it is. And it kind of goes back to exactly what I just said, And so no, all good stuff. Well, all right. So now that we're all here in the room, we're talking about different things. Like we said, the whole thrust of this show is really to focus on domain activity, sales that are happening, to kind of get an idea of what's going on from an end user standpoint. So we try to highlight some specific buys, sells, things like that. And then we can get in and talk a little bit about, since this is the first show of 2023, what we expect to see in 23 trends, what we saw at the end of 22. It's crazy that it's 2023 already. I'm saying these numbers like that's not even real. It's like out of a science fiction movie. But the first one you guys want to talk about, I think we were talking about link.com. We talking about that a little bit?
Yeah, let's go for it.
All right, well.
Yeah, so this is a domain name that I wrote about on jamesnames.com last year, and I've been kind of tracking it ever since just to see where it ended up, because it went under privacy protection at the time because it was sold by a guy called Deepak. I'm going to get his last name wrong, but Taplial in August 2022. He's a huge NFT guy. Drew, you're wearing your Bored Ape top. He's bought and sold his fair share of Bored Apes.
Sure.
Yeah, we've done several deals with Deepak.
Yeah, so in terms of domain names, he's got chain.com now. He's had block.com. He's had assets.com, reform.com. He knows a good name when he sees one, and he sold a really good one last year. And so this week, I think it was this week, I saw that it went over to Stripe, and Stripe, the multi-billion-dollar payments company, acquired link.com as an upgrade from link.co. And link.co they bought in 2021 for $162,000, which for a .co is a pretty huge amount anyway.
Were they using that, James? Was it active before?
Yeah,
this?
link.co is active right now. So that has its own brand separate to the Stripe brand.
Yeah, so
it's like a
Stripe is using exactly. It's like kind of how PayPal tried to do that. Like, you can get paypal.com/Drew, and then people can go there and just make a payment.
Yeah. So yeah, that's kind of what they look like they're doing at the moment. So link.com, as of recording, redirects to link.co, but I can imagine they'll just run with link.com in the future.
I mean, wow. First of all, talk about security issues, right? On the .co.
Yeah, if you're doing pay links on a .co, you are honestly, someday, I predict that someday we will see a negligence claim because somebody gets spoofed or somebody gets, clicks on a bad link because some financial company didn't use a .com. It really is that simple. I mean, if you're not using a .com and you are a financial company, I personally, as a non-lawyer, and no, I don't play one on the internet, believe that you're negligent. You are negligent to your customers and your fiduciary responsibilities as a financial services business if you're not operating on an exactbrandmatch.com, because anything else leaves your customers susceptible to spear phishing, phishing, and spoofing.
Yep. That actually what I told in one of my replies back to a company a couple of months ago, just that it's like you're training your customers to accept any domain extension, right? So maybe you look at some of these, like we're brokering a domain right now, and this company's using like 5 different email extensions. Not email, but like different sites. Well, they're literally training their customers to like accept any link, right? Yep. No pun intended, right? Link, but like any, like any different URL, because they don't know what the hell's going on, right? They haven't created this clear path. And Drew, I couldn't agree more with you. I think that's, this obviously I didn't know about link.co, wasn't on there, wasn't looking for those services, but they probably had a massive issue and probably wasn't one like, hey, this is an upgrade. I started to say that it's not vanity, like it's status, not vanity, right? There's a difference between status and vanity. But this was clearly, wasn't, this was like, I need this. We need this in my mind.
Yeah, I agree. It is interesting to me, though. There's a whole, I don't want to go too far into the weeds because we'd be out here for hours. But I do have some insights on this. I'm not sure what I can and can't say. But like, I think, first off, they were aware of and had the opportunity to buy link.com at the time that they paid the 100 and whatever thousand to buy the .co. And at that time, it was for sale for, I don't remember the exact price, but it was around 400,000 was the asking price. Might have been 5. I believe it was indicated to me that I could buy it for 400,000, if I remember correctly. And so, and that was exactly at the same time that they ended up buying .co. Now, I bring that up as an interesting topic because, Chris, I think we see this all the time. It's like, well, you can get the .com and it's 400, 500 grand, or you can get this .xyz or this .co or this .io or this .ai, and it's going to be 100 grand or 200 grand. And the average person who's uneducated on the topic, not their own fault, because how should one become educated on domain names unless you watch DomainSherpa? Then they say, oh, well, we can get the .co and it's half the price. And they make that evaluation as if it's apples to apples. They're not factoring in the risk. There is a risk premium to every single domain that is not .com and is not an exact brand match.com. And so I'm not saying you can't buy the XYZ or the .co or .io. Have at it. I've seen great companies build themselves up. It's just they get to a certain point when they do that math and they understand that risk premium of not owning the .com. And when you properly apply that risk premium to the price you're paying for the non.com or the non-exactbrandmatch.com, that math very quickly stops making sense. And the only hurdle between arriving at that math and the place you started from that caused you to pay 150 or 170 or whatever it was to buy the .co instead of paying double to buy the .com, the only hurdle was education, right? It was just, I didn't know that the .co was actually probably worth 2% because of the risk premium and the next 10 years of risk premium cost, sunk cost in customer acquisition, et cetera. All that stuff added up worth 2% of .com, right? And so bad math.
They know now, we got some more believers.
Well, that's the thing is everybody that makes that mistake ultimately learns the math. Okay, well, because they, men lie, women lie, numbers don't. And so I can sit here and I can tell somebody how the math works, but they're going to assume I'm lying, as they should. And simply because that's the nature of sales, right? And the relationship between somebody who's trying to be sold or is being sold and somebody who's trying to sell, right? And so healthy skepticism is the name of the game. And so, but then they make the mistake and then they learn that lesson and they learn it the hard way. And the thing that's frustrating to me and that I don't understand is why don't more people learn from the people that already made the mistakes? And these are high profile companies. It's Stripe with the link.co. It's Overstock with O.co. It's, the list goes on and on. But anyways.
Well, I think there's just, they see, was it Locket.xyz? They see, some of those and say, wow, what are they doing, right? I mean, but there's a different business strategy behind those.
I know what they're doing, but I'm not going to say it here.
Yeah.
Okay.
If that's the case, if they were able to buy the link.com at the time when they bought link.co, I don't really understand their logic because Stripe operates on stripe.com. It's not like they maybe have a lack of funding in what's available.
No, it's the person who was the point person on that decision. And they looked at it as if it was simply, it really is that easy. Okay. This is like literally the most common problem in the domain sales is that people evaluate their next best option, right? What is the fundamental principle of negotiation? Unless you have something that's truly a one of one, okay, and is not a nice to have, but a must have, then you're only as valuable as your next best option or marginally more valuable than the next best option. Okay. And the problem is that the next best option, if you're saying that .co or .net or .ai or .io or .xyz or whatever the other extensions are, if you're saying, and I'm not against all of these things, right? Like, have at it. I just want people to understand the math that goes into establishing value, right? It's just strategy and math, right? Maybe your method of customer acquisition has different math and it doesn't matter what domain you're on because people are coming in through some other channel. Fine, right? Then why spend the money? Right? Have at it. But that's not the case for most people. And they look at it in a very simplistic way of this costs X, this costs Y, this is more than this, I'm going to go with the cheaper option. And they don't understand that it's not that simple, right?
Sure.
That
100%. And I think what's a couple of things that are very interesting about Link, right? Now you're talking about it like, to James's point, this is an enormous brand with, and it's not like they didn't have the funds. The fact that they were shifting to, utilizing this additional brand, the sort of this sister brand for this kind of related service is interesting too, that they said, hey, we're going to launch this thing sort of outside instead of calling it like, Stripe Quick or something like something Stripe something, based on what it is, because the idea is almost like they're like, okay, we want to get, this is a Cash App type equivalent or some way to make it so that companies can set up a quick payment portal that doesn't involve needing, maybe they felt too many people think of Stripe as the thing that you connect, the actual terminal that you use that you either connect to your phone or you've got in front of you on the, when you're checking out. But they were using Link as the brand from the beginning and not using it like link.com, link.co. They weren't saying, hey, this is our new brand, link.co. This is our new brand, Link. And to have the .co versus the .com when you're trying to create your brand as the actual generic term is just a disaster,
So
do you think it was like a proof of concept thing? They spent an X amount of budget first.
Very well could be.
Okay. Cool.
Very well could be. Yeah, very well could be.
I don't think so.
So what I think I know what link.com sold for. I don't know for absolute fact, but we were involved in a deal just immediately prior to it selling where it was going to be a part of a larger transaction. What would you guess, James? I don't, we don't have any NDA, but it's not my business to disclose it. It's not my, not my deal. So I'm not going to disclose it, but I am curious what you might think.
Yeah, so I've got no insight at all into this, so I'm just shooting for this. I'd probably say if it was Stripe, I'm going for 1.9 million. And I feel like that's a justifiable price for
Easily.
an end user to pay.
This is by the way, link.com is a 1989 domain name. It's one of the first 1,000 domains ever registered.
Wow.
Well, one of the first 1,000 .com domains ever registered.
Right. Huh. So that domain is as old as me.
Yo, that's crazy.
Yeah, that's wild. That is wild.
You know, what's also neat, I just, now I'm spending some time on the link site, and it looks like they've already got some interesting, they've already got some partnerships. Like you can use the link to buy NFTs on Magic Eden. You can buy Keeps, which is like the hair restoration folks or whatever, the hair loss, which I'm long past being able to try to use. And yeah, and it says millions of companies use Stripe to process payments and manage their business online. Stripe created Link to provide a faster, easier way to check out and manage saved and financial accounts. So, it's an interesting thing. So they felt like, okay, hey, there's a product, there's a gap here in our product offering. We need to create something. They felt that there was a need to create a whole new brand around that. And to their credit, they recognized that, going with some sort of a brand that was going to be something that was dominant, right? Like a one-word short link as a term, as a word, and obviously as a .com domain can't do much better, right? I think it's interesting that they were willing to say, all right, we're going to do this sister brand and make it as amazing as it is, but then obviously it took them a second to ramp up, and they probably did pay 4x what they could have otherwise paid for the domain by waiting. And probably
they paid a lot more than 4x.
It'll still be priceless.
They paid a lot more. Yeah.
In the end, it's still priceless, right? I mean, and I think there's two things, right? So for me, one is the 7 dimensions, right? It goes back to that video. If you haven't checked my YouTube out, check it out. But a lot of times we think of like two of those are, one is scaling, and this thought that companies need to scale, right? There's a point where like your messaging and the products you have goes so far in order to create a clean and clear message to go after a specific, let's say, niche in the industry. You create a new brand, right? So every company needs to scale, and part of that scaling is a new domain, it's a new brand, right? But I really think the security thing is another like topic that I'm getting on now in some of my emails, and that is that you're training your customers to accept spam because you've created confusion, right? So it's not just email security, like you're missing emails because, listen, you do some of that email, it's against law, but it's no, you're actually like your strategy is a risk. And especially with these, I mean, I see it with online security companies. I'm like, listen, like you're a security company. You're like, you have a massive gap. I forget what the company it was I was talking to, but the massive gap. That's the first point. Second point is that, listen, domains are assets. Pure and simple, right? I mean, he bought this, he sold it. He bought, if it's right, James, right? He had Block, he sold Block, he sold a couple other ones. Like I've seen that recently where like someone bought the domain name in the 7 figures, and like another company came along, wanted to pay him 8 figures, and they're like, no, we're never selling this.
Yeah, I mean, ultimately, that's the part I think that a lot of domain investors, miss is everybody's just so excited to get a sale that they don't understand the circumstances around each sale, and they leave a lot of money on the table. They leave a lot of money on the table by passing on offers they should have taken, and by not thinking bigger on deals they could have done.
MediaOptions is the industry's leading domain broker specializing in domain acquisitions, high-value domain sales, and domain name consultation. As pioneers and thought leaders on the subject of the domain aftermarket and domain name value, plus through their clear domain acquisition service, MediaOptions offers startups and established corporations an unparalleled scope of high-value domain options, providing access to domain names and curation technologies not available elsewhere. MediaOptions believes in the power of a great domain name and is dedicated to helping you obtain yours. Call or email today to put a domain to work for you.
Well, it's timing too, right, Drew? I mean, like
it's all time.
When we hit 2023 trends, JT, like I think that's one of the biggest trends.
Yeah,
is this timing, and like last year asset prices, we talked about this extensively. Like no one understood asset prices, right? You go in, the truck is like they want $8,000 more. People are paying that, right? Now they're like, now they're pissed because and they're turning the cars back in. Like,
but
and I think a lot of people passed. Well, I'll say it for the trend section.
Well,
I think
I think let's go right in. Let's segue into talking about trends. I think this is a really good segue for that, because I think you're kind of touching on a couple of different pieces. And we saw the economy shift from this exuberance, and in certain cases irrational exuberance, the bubble, and it kind of popped, if you will, right? And then the impact that has had, I think that a lot of folks will still trumpet the value of, as they should, the value of like really strong assets, strong digital assets, strong domain names. But there's people that absolutely missed a once in a lifetime opportunity because they got greedy. And it's like they say, pigs get fat and hogs get slaughtered, right? And it's or is it the other way around? You know what I mean? But either way,
it's pigs get fat, hogs get slaughtered.
And and then that's what so let's talk about that. So Chris, I mean, what do you
James, you missed Portuguese.com in your article, by the way. They also own Portuguese.com.
Who's that? World Class.
Yeah.
Oh, cool. Yeah. They own a bunch of them.
Yeah.
So my point was that, and I mean, part of it's greed, JT. Part of it is people just, it was just whacked, right? I mean, people were selling, like the home next to us wanted to sell for 2 times as much in like 16 months, right? Mm-hmm. I mean, things were going crazy. Homes were selling, for a lot of money. People were buying, JPEGs of.
Hey, look! I mean, you look at the NFT wave. I mean,
there was like this crazy, like it. So it just comes down to asset pricing. Asset pricing was, but yeah, I kept telling people, listen, you're passing on your perfect buyer. You have to understand trends, right? I mean, look at the meta trend. Every trend kind of starts the same way, right? There's this rush into it. Everyone's trying to pre-position. They buy all these ancillary domain names. That is the best time to sell your domain name. Then it comes, it settles down. Share positions take place. Then from there, it's brands. Okay, and they come back and you look at how the different brands, you look at the sleep, for instance, right? You have Purple, right? So it went from like Casper and these things that were related. In beds, then it went beyond that, and then it can come back later. But if you pass, you pass. And I think my prediction is that we have a small window in the next couple of months. And I think it's in line with Drew. I'm not as optimistic in the back half as Drew is, but if you this is the time to sell. You have like one gasping breath to make a deal happen, and if you miss it, the time to prepare is when you can buy this stuff, not when you need it.
Yeah, so let's talk about that. So your thinking is, so where would you say we're at right now, right? Have we recovered a bit currently as far as, from, I think prevailing thought seems to be that we've recovered a bit from the lows, and that, we're in a better spot than we were. Would you agree with that? And how long do you think it lasts?
A year ago, we saw buyers pass on just their top offer, right? And now we're seeing. You
mean sellers?
Sellers. Yeah. Now we're seeing a lot more sellers come to us saying, "Hey, I'm ready to make a deal." Right. So that's just the data that we have. I mean, on the ground, understanding that, they want deals, right? So they see it in real estate, and that's kind of translating, right? We have friends that have had real estate on the market for 8 months now, right? I mean, that was unheard of a year ago, right? So now you're getting all these outside factors that are coming in, and that's hope it's grounding the owners.
Those outside factors are otherwise known as reality.
Reality.
It's cashing that reality check.
Yeah.
So yeah,
well, that's it. That's my biggest message. I think you have you have a window. You missed this.
People also just it seems to be human nature and psychology. Like they anchor into, all right, well, 2 years ago, somebody offered me $1 million. And it's like, well, sounds like you should have taken that deal 2 years ago. It all comes down to liquidity. It really is all that simple. When there's money flowing and it's trickling out into all the sectors, it's trickling out into the private equity funds, it's trickling out into the venture capital funds, it's trickling out to investors who are then bidding up stock prices. Companies are using those stock prices to, basically make it rain on shareholders. And so everybody's, the money's flowing, everybody's making money. You just had to close your eyes, throw a dart, you made money. And if you didn't, well, that you weren't paying attention. And you had a moment to make that money, right? And then there was a moment when it was very clear when they shut off the tap, it was like, there was ample warning given. If you had your ears open, it was like time to take the chickens home, like slaughter them and put them in the fridge.
I was trying to figure out where you were going with the metaphor, but yeah, no.
Yeah, it's just you got it's time to take something off the table, right? And that time is over, and we're in the opposite regime now. High interest rates, cost of borrowing money's high. That's going to perpetuate. Like, I know all these people are like, well, Fed's going to pivot. What a Fed pivot looks like is we're going to stop raising rates, and that won't be today. I can tell you that. And we're going to stop raising rates, but we're not going to lower them. There's going to be a second wave of inflation. This isn't going to be like look, I think that Chris, I'm more or less in line with Chris. I think that, this is a bear market rally. Okay. This is exactly Chris or whoever said, you got one chance, you got your head up above the wave. You got one chance to take a breath before that next wave puts you back under. You better take that breath and hold it, and that's where we're at. And then I don't think it's going to be sustained. I think it's going to be a very bad crisis driven by, the next unleveraging somewhere in the markets. I think it's private equity, but could be something else. And that's going to drive the next leg down, and we're going to see a pretty ugly situation. And then, look, domain names are incredibly valuable assets. They are underpriced, okay? But we're not going to fully appreciate that price tomorrow. I think that the only way today where investors are fully appreciating the price, or let's say the value of their names, is by doing long-term deals through lease to own, or through getting a piece of the business, getting a piece of the equity in that business, letting that business fully appreciate the value of the domain name. You get to come along for the ride and fully appreciate the value of the domain name. But you're in an environment where, it doesn't matter what you think your assets worth, right? You gotta, if you need capital, then you're a price taker, right? So price taker meaning the market's going to give you a price and you have to take that price if you are in a position where you need to make sales or want to make sales. And until that tap comes back on, until you hear Jay Powell go, all right, start that party.
Going Powell.
Yeah, Jake Powell.
And I don't think we're saying there's not big sales happening, because we know.
Absolutely.
Massive sales.
100%.
It's just.
But those are the. If we look at your framework, Chris, what bucket are those sales falling into?
High rev. I mean, it's high rev entrepreneurs.
It's people that need the domain, and they've got businesses to sustain that purchase. Where it's not happening anymore is the company that just raised $10 million. They have a business that burns cash. They're not sure over the next 5 years when they're going to get to profitability. And, but we know that in 12 months, we'll be able to raise another round. So let's buy that $1 million domain. That is done. That's over, right? So I think it's exactly at least what I've been saying for the last 12, 18 months, which is what's going to happen is you're going to see less sales.
Yeah.
The sales that happen might even be bigger than before, because the sales that happen are going to be going to companies that are battle tested, profitable, or a clear path to profitability, and they are the best in breed. And so the VCs are doubling down on them and telling all the other smaller competitors to go pound sand, right? It's going to be, so you're going to have best in breed is going to win. Everybody else is going to die.
Let me make 2 points here, okay? One point is, like, if you're a company, like, there's a reason why we do 50% of our business in stealth acquisitions, okay? Because if you go to that investor and you're like, hey, we just want to have a conversation, they're like, thank you for telling me who you are, because the price just went up 10x, right? Now, sometimes I said in my video that I just did on YouTube, I was like, the reality is that, when you price it in another galaxy, a deal doesn't get done, right? So you may think, oh, it's this great company, right? But there's a reason why you don't do that. So I mean, if you're an end user, if there's any end users listening to this, reach out to us, let us help you with that, because there's a way to go about this to get a deal across the finish line. And and the second point is that there are several players that have had big sales, and so listen, they're okay with waiting for that next big sale. They're okay passing on some of the smaller offers, right? Because then it's like an educated gamble. And other people with portfolios that are smaller, you gamble. I mean, you might only have one or two domains that actually get a real good offer in. And I always say, like, can you recognize, like, could you recognize the top offer you received? Could you recognize it, right? In your lifetime, you will get one offer, hopefully, and it'll be the top offer, right? Can you recognize that? I mean, it's different for each domain name, but
sometimes that offer will come in like the next week, after you've bought it, or it might come in 10 years after you've bought it. But it's really difficult to tell what the best offer is. And, if it comes in 2 weeks after you bought it, you're probably going to wait for that next offer and then regret it in 5 years' time. And I guess that's the art of it, is just the timing, being 100% confident with your valuation and being happy to move it on at that price.
And that's where I'll say
that's been my point all along, is like, that's why it's so important that we have an objective, agreed upon valuation framework that everybody can lean on and say, all right, I know my domain is worth this from an objective standpoint. Now, I 100% concede that domain names almost never sell for their objective value. Sometimes they sell for more, sometimes they sell for less. They very rarely ever sell for the objective value. That objective value is an anchor. It's okay. So it's a crutch you can lean on and say, I know my domain is worth this because there is data that supports it. That data is based upon the cost of customer acquisition. Okay. Now, subjectively, it might sell for more if you have a highly motivated buyer and you're a good negotiator and you don't have weak hands. But in most cases, it's going to sell for less than that objective value because it's timing, right? But I think it's important that people know that objective value, because that allows you to say, well, this is only 5% of the objective value, easy pass. But if it's 80% of the objective value, well, now you better get very serious in the way you negotiate or just take that offer, right? And you better be prepared to lose that deal, but knowing that may be, like Chris said, the best offer you ever get for that domain, because it's at 80% of your objective value. If it's 120%, you better think real hard and fast about whether or not you're going to take that deal, because it probably is. Statistically speaking, that's probably the best offer you'll ever have.
Well, that's the beauty of it.
Oh, go. No, I was just going to say, because it is really interesting. We have a lot of folks who reach out wanting us to help them broker their domains. And, oftentimes, more often than not, I mean, we're very selective with the clients that we take on. And, because you have plenty of domain owners that clearly don't have a real grasp of, the objective value of their domain. They base it off of just things that it's almost like their heuristics around, they're trying to just get to the end result that they want to get to, just because that number kind of makes sense to them, not based off of what the actual facts or statistics or the data shows, but just because that's what they feel they should get. So then it becomes sort of this roundabout way of justifying the value that they think they should get, and, yeah. And it's interesting because it's like, if without a real grasp of what it is that's going to drive the value of a domain, you're just kind of flying blind, hoping, and it's hard to know that when an offer comes in, like, okay, I really should take this because this is in line with what this name is really worth.
But James, I think you should do a poll here, okay? Since you're, I think you should do a poll and say, how many of you have sold a domain name and had someone come back and offer more? Because I don't think it's that much. I think it hurts. It stings. The people.
Well, I sold NFT.com.
I was going to say NFT.com.
2.1, and then
sure.
like literally 2 weeks later or 3 weeks later, it was offered 20 million.
Yeah,
but that's selling.
That you can blame on JT, actually.
But okay, but you're rare.
So hold on.
Hold on.
We're having this out right now. No, I'm just kidding. But it wasn't just on me. I mean, look, at the time, that was an offer that was really great, and we were excited to get it. There were a lot of virtual high fives. You know what I'm saying? Like reaching out across the Zoom, high five. But but there were also other things involved too. There were other partners and things that that played a role in that process, you know what I mean? And which, we weren't.
I've seen it many times. I mean, we had I said I've seen that many times.
Yeah.
I've seen, like, I just had this happen again. Like, we have 2-letter domain names help clients acquire, and people came back and they offered like, in the 8 figures. I mean, like well beyond, and they'll never sell. So we see it, but I think that
it's definitely the exception. It's definitely the exception, not the rule. Yeah.
But do a survey, James, and just see. Like, I think that FOMO gets people, because I literally hear that statement, Chris, I couldn't live with myself if I saw this domain name sell. And I'm like, can you live with yourself?
The wrong mindset.
That never sells.
And that's the thing I think that people
100%.
absolutely,
literally word for word.
Because going back to the whole thing with the
But
NFT,
what is that? Think about what is that? That is envy, right? Envy is going to steer you wrong every single time. It's envy. Why can't you live with yourself when you see it sell? Well, because you're envious of the person that actually got that sale.
Well, and I
you
think
can't
there's
live that
also
way.
something
You
about.
got to make decisions, move on.
Well, I think there's something
Don't
too
look
about
back.
missed opportunities. If you feel like this was my one shot, my one opportunity, to seize everything you ever wanted, would you capture it or let it slip right up? Shout out to Eminem and lose yourself.
Weak-minded, man. Weak-minded. That's what I say.
Well, and I think
Weak-minded.
part of it is also just being able to accept a good result and just being able to live with it regardless of the other external factors, right? Because this goes back to the NFT.com thing, which, to be perfectly honest, like as much as we joke about it, and it's like, I don't really, I mean, it impacted me as well. I don't feel that bad about it because, again, I know that at the time when we made the decision to do what we did, again, there were a few other variables and things at play, but really we felt like, hey, this is a fantastic offer. The multiple that we're making off of the sale is great. It's real money. It's a bunch of money. And, again, it was a lot of high fives. Obviously, after the fact, it's like, oh my God, we could have, but I think that I feel less, any kind of way about it because at the end of the day, I know that the decision at the time that we made it, we know it was a smart one. It was reasoned, and it was, it wasn't done in any kind of way. Like it wasn't a rash decision where we realized we had made the mistake. It's that, it was one that we took a lot of time to make sure that we felt good about the decision we were making. And, and you can't predict the future, and I think the other thing too, is it's also hard when you're talking about trying to judge like to the, if you're trying to time the market to sell the top or buy the bottom, then, good luck, because at the end of the day, you're never going to be able to do that. You're going to have to accept every time I sell stock, every time I sell an NFT, I'm always like, there's about 30 seconds after where I'm like, ooh, was that the right? Because immediately it'll go up right after I sell. And then I'm like, oh, that was the worst decision I ever made, but is it though? Like you made your choice, you're doing whatever you're doing based on the data that you're doing. If your system is flawed, or if you don't know what you're doing and you're doing things just based off of feel, then sure, you're going to make a lot of bad choices. You know what I mean? But, at the end of the day, like, that goes more to who you are in your process,
But with NFT.com, you were looking at that objectively. You had your
100%.
data, you had all of the information possible at that time. There was no way to know whether NFTs were going to go up or whether they were just going to crash. And you sold it at a time where you were confident of the valuation. And that's all you can ask for. And the what ifs are a completely
100%.
different thing.
Well, but don't also
100%.
discount, like, that's an event that happened. Okay. So it's like, the butterfly effect, right? You sold it. That event goes into the new buyer's mind. Okay. And it elevates it. Would that butterfly effect happen had you not have sold it? We all know.
You know what? That is an amazing point. That is such a powerful point, Chris, because I've thought about that a lot in the past. And it's funny, I've never articulated, but that's exactly right. And I would argue that in more often than not, in more than 50% of cases, it would not have happened. Yeah. And we see that because you can tell the difference. When you get somebody that comes in and this is what I'm willing to pay. But as soon as there's a competitive offer, they're willing to pay more. But I'm telling you, don't ever bullshit. Don't ever bluff. Don't ever pretend you got an offer, because I'm telling you, I don't know what it is, but it's pheromones. It comes through the digital email and the Zoom, but the pheromones come through and they know you're lying. And I promise you they do every single time.
Yeah.
I don't even know why. I can't. This is something I've looked at, but you don't ever bluff. Just don't bluff. I can tell you that if you ever got an email from me telling you that somebody else made an offer and it's time to step up, you better think twice about not stepping up, because I mean it, right?
Oh.
I don't bluff. I don't bluff. Period. Full stop. End of story. I don't bluff. And it's because I've seen how many times you get burned by bluffing. So you can't bluff. And if you're not bluffing, and if you have a bona fide, legitimate higher offer, it causes people to the psychology changes.
Sure.
But if I didn't have that, that person wouldn't have paid. If we had just set the price higher, that they wouldn't have paid. You're 100% right, Chris.
Well, I mean, it comes down to, I mean, we know the value of these domain names are 10x what people buy them for, right? Even let's say it's a 7 figures, like, no, this is 10x that, right?
Yes.
And so the value is always there, but it's like, how do you, and this is something I think about, all the time, right? It's why I created 7 Dimensions. It's why, we've got the frames that we have, and just this continual, like, how do you show this value and communicate it? But yeah, I think a lot of those wouldn't have happened because we've talked to them. When we say, hey, they bought it for this, it's going to take this to take it. Okay, boom, right? And they could have bought it like the link.com deal. They could have bought it earlier. Why didn't they do that? Right? Now they're like, oh, okay, now now we realize the value here. Okay, great. But before they didn't step up.
Yeah. And then, and unfortunately, then for them, it costs them, to the extent that it's unfortunate, but it costs them a lot more money to get it after the fact. And, it's like lesson learned. It's an expensive lesson to learn. And, as long as it's not a fatal lesson, then it's okay, great. But it's an expensive lesson nonetheless.
But it's not. In the end, the main, like, I think Drew and I, there's a new kind of.
Oh, it's still worth what they paid for it. I'm just saying they could have saved money. You know what I mean? If the thing is, they were being penny wise, pound foolish initially. Yeah, there you go. And they would actually save money in the long run. But instead, then they ended up having to spend more in line with the market value of the domain. And it is what it is, So, and it's all good. I think the point you made too, and we'd see it in NameJet all the time. Like, that's why the auctions do what they do sometimes. Like, you have domains that we would list with a reserve price, and nobody would come close to touching the reserve. You take the reserve away completely, and then you'd sell it for 2x the original reserve. And it's just there's a psychology there. You create some competition. You recognize, like I say, every domain is a snowflake. These are unique digital assets, and once they're gone, they're gone. And it's
I guess actually thinking about it, it's not that hard to understand, right? Like it's ultimately social proof. And, when you have something like domain names that very few people understand how to value, then you're leaning even further on the social proof aspect of what is somebody else willing to pay, right? Mm-hmm. That's why auctions in general are a great sales channel. I'd argue not in domains. Auctions are a place to buy domains, not sell them. But unless you're looking for liquidity, but it's not the place to get your optimum value. But domains are something very few people understand, and so in an auction, they look to other participants with bona fide offers to help them set the value, set the price. So I think that social proof is ultimately what we're talking about.
Yeah, well, no, I think that is because so much of the conversations we have with potential clients on both the acquisition side and this and the sales side, which is also interesting too, based on just some of the chatter. Like people don't realize how much acquisition business we actually do. And for what it's worth, you talk about the stealth acquisition piece and how we go out and help big companies acquire domains. We've also got plenty of small clients as well looking for domains. On the acquisition side, not everybody's a whale, right, that we represent. But I think it's so much is always, the expectations of what is this domain going to cost me? What am I going to be able to get if I want to sell this domain? If I'm trying to sell the domain, the appropriate price, and also explaining the, sort of the scale of like, well, based on, how quickly is the process going to, how quickly can we sell it? And it's like, well, some of that will be dependent on price. If you want to get what we believe to be the top value that this domain could garner in the market, it's going to take you a bit longer to get to that price. If you're willing to sell it for less than what we think the name is actually, should be valued at on the market, then you can sell it more quickly. And but it's still also with these assets being as expensive as they are, it's not, there's no guaranteed time frame unless you're trying to sell it at well, your
domain has a value. There's a value range with it, and when you get beyond that, then there's just options, right? So and I talked to a lot of people that have like marketing campaign domains. You're like, listen, it's like this company. There's a number here. They may love it, but they can pivot so easily with a different word, the plural. Like that's why there's a value to that. Unless they love it, unless they have a marketing campaign like happened to Drew, I think, where they have it printed and they're like, oh, we need this. Then you have leverage, right? But outside of that, there's a number that it hits, then they just say, okay, great, let me look at some other options.
Yeah, no. So, all right. So then I think that we've kind of covered as far as on the trend piece, so what we've been seeing, we've seen a little bit of a recovery, kind of this bear market rally. We expect that to be followed up by, some pain, followed by recovery. Where good names are going to continue to transact to companies that, bona fide companies that are proven or funded to the extent that they can afford it. And then I guess the rest we'll just kind of see what's what. It's interesting because we also, across the spectrum of digital assets, even some of the NFT stuff, like, there was, I'll call it a big old bubble, right? But the projects that are, the Yuga Lab stuff continues to do well because, and there's Bored Apes continue to hold real value because, that company is funded pretty heavily, right? $400 million and continuing to do interesting, cool things with, pretty strong customer base, if you will, with, so it's like the cream continues to rise to the top. And I think we're going to continue to see that as we go. I
think that's ultimately what we were saying is, when you have market confusion in any market, there's a race to quality. That's what happens, right?
Yeah.
The capital will flee to quality, right? So the venture capital will go to the best names. The best names will get more capital than they would have otherwise. They'll have less competition, and they'll be able to utilize that capital to buy better domain names.
Yeah.
And so, the cream will rise. That's just how it goes.
Yeah, and which I think we'll probably use that in the title of this episode. And because the other thing I think too, it's like, look, if your money just sitting by itself is going to earn you 4 or 5%, then it's got to be the stuff that's a better bet to get you to want to deploy your capital elsewhere, right? And that's gonna, and that's how it's going to ultimately expand. So
when it earns you zero, it's they're telling you go take risk.
Go risk, risk heavy. You know what I'm saying?
No cost for risk.
Yes.
No cost for risk.
Yeah, and now there is. So, all right. Well, look, I think we covered a lot of ground. I mean, you guys want to talk about we have another domain sale or two on the list. You guys want to?
I think that's a good stopping point. But
all right. Well, hey, then we're gonna
a lot.
All right, we're gonna keep it short. I like it. I like what we did. To James's point earlier, look, we're not hard to find. So if you guys have any follow-up questions, comments, thoughts, any of that kind of stuff, let us know. Any particular domain transaction you want us to talk about, let us know, and even for upcoming DomainSherpa reviews and some of those shows too, we're starting to, we can expand out and, we've reviewed a couple folks' names here and there. And so if you have some names you want us to look at and talk about valuing and things like that, we're open to that as well. So not hard to find. And, but I appreciate you guys. This was a good one today. Oh, go ahead, Chris.
I'll say two things. It's the wrong title. Make sure you download my book, okay?
Download the book. Go get it.
Downloaded it, okay? It's limited time. I can put the link in down below, but it's domainnamebrokersecrets.com. It'll flip you over. We'll have it on MediaOptions.com soon enough.
Yep.
And then I just put out a new video that on like domain value, understanding it. Check it out. I think it's like accumulation of. Probably shouldn't have put it out, but years and years.
I know.
Great video. Great video. If you want to understand why a domain is worth what it is, or even more why a particular buyer is interested to buy your domain name and the way they're thinking about what it's worth, that's the video to watch.
Yeah. Yeah, we'll put the link on the post. So, if you're just listening to this on one of the podcast channels, if you're on Apple or Spotify or something, you can go to DomainSherpa.com. You can go to this particular episode's post, and we'll have some links there so you can check that out. But definitely grab Chris's book. I'm always so torn, man, with how much you put out there in the universe. I mean, we do a lot of that with Sherpa in general. But you especially, Chris, I mean, you give up some secret sauce sometimes, man, where I'm like, ooh, are we over disclosing? But it's,
well, you know what? Some people can't see it, right? I mean, it's right in front of you, but you can't see it. But yeah, I mean, there has to be a way to explain the value. And that's my journey. I'm just trying to figure out what is that formula to explain value.
The more people understand how to value domain names, the bigger the pie gets for all of us.
Yeah, no, I think that's a fair point. And that's why, that's our thing.
In fact, James, if you want to take one message back to GoDaddy from, the domain community, if I may be so bold as to speak for the domain.
Speak on it.
As if, probably the last person to speak for the big group. But anyways, it's, domain. I understand why GoDaddy does their domain valuations the way they do. I understand because it probably triggers a lot of people to go, yeah, let me go sell my domain in your auction for pennies on the dollar. But it does a lot of harm to uneducated end users who are serious about domain purchases and go and look at GoDaddy and they go, oh, GoDaddy says this domain's only worth $25,000. And we're like, well, GoDaddy doesn't have a clue what you're talking about. Some bot that is trained on data that has a max ceiling value of $25,000. And this domain is worth millions of dollars, right? And so anyways, I think they're doing a tremendous disservice. And I think most automated appraisals do a disservice, but I understand the need for them. So I'm empathetic to that. But the best thing that GoDaddy can do for the entire domain industry is coming up with a truly meaningful, data-driven approach to assessing the objective value of a domain name based on metrics that are driven by customer acquisition cost for a company that would be operating from that domain. And there are very basic assumptions that go into that I think most people, particularly in the SEO community, would all agree on, and is actually the fundamental reason the domain is worth what it is.
All right, James, there you go. That is your as the community manager, as the liaison. You know what I'm saying? There you go.
Spot, baby, on the spot.
You're like handing them, take this back to your boss. Take this take me to your leader.
No, I mean, I don't think that's controversial. It's like,
I think if we're talking about domain valuation tools, it's challenging because
step back. It's like if we're talking about, how to improve the domain community. We're talking about how to grow the domain name pie.
I don't think what you just said is inflammatory.
How to increase domain transaction volume. How to increase domain transaction size, meaning the price, right? All of that comes down to one very basic principle, and that is that there is a even playing field on understanding domain value. That's it.
Yeah.
That's a single hurdle to probably 5 or 10xing the domain name industry, in my opinion. 5-10x the entire industry simply by creating an even playing field where people can understand an objective valuation for this domain name.
Well, not only that, I would say it's also I can't think of the word, but you're helping out the end user company, right? How many companies should have acquired that domain name, but because they don't understand, let someone else acquire it, and we're immediately impacted. I'm trying to think of the what's the one? Dang it, it's like I can't think of it now. But there's one that it's something software. It was like literally direct. I talk about it all the time. I don't know why I'm blanking on it. Workforce software and workforce. It's like, I mean, man, wow, right? So I mean, you're actually this is a good thing for companies, not only domain brokers. I would say it's a service that needs to be done because it's fundamental to SEO conversion. I think Drew said.
Yeah, no, and again, I wasn't saying that what you told James is wrong or inappropriate. I think at the end of the day, this is exactly this is the channel, right? To let him know. And because it's not a secret. I mean, I think you can look at all Estibot has its challenges as well. I think anything that's going to be algorithmically driven is going to be challenging, but they can all be improved. And there are, I think part of this also is a matter of honing in on everybody on the same page as to what it is that drives the valuation, and, we've got the Rosner equation out there, which is also, Drew developed it. And it sounds so it sounds kind of funny to say it like that.
I didn't name it, by the way. You know what I'm saying? Saiger named that, not me. I didn't name it.
I was going to say Saiger utilizes it. And Saiger uses it in the, in the DN Academy stuff. And, because it is
for everything.
Well, because it really does it is an objective and, it's a pretty reasonable, clear way to, approach domain name valuation. And the idea of having some consistency across that, and we have this conversation all the time. And, even when we talk to, VC type folks and hedge fund folks about, developing domain funds and things, it's like the valuation. It's when we talk about Rally Road and these other things and taking domain names public, I mean, so much of the challenges that arise with a lot of this stuff is domain valuation. And it's because, coming up with a consistent, objective method to be able to, value domains in a way that's, that makes sense and that everybody can agree on to some degree. So,
But just to the Go value point, it is a product that is actively being worked on. Like I've had meetings so far, and there's teams of people just wanting to make this better than it is right now. Like it's a really good point to, like for people to understand the value of a domain name, but obviously it's a work in progress to some extent.
Yeah.
Like any product is, like DomainSherpa is a work in progress. It's been on for 11 years. And
a lot of room for improvement here, man. No doubt.
Right back at you, JT.
I know he's like, you thought
that was the James Al soft right hook. He's like, hey, and by the way,
no,
just
like
we're playing. It's all good. We're just being funny, but absolutely, it's cool. I'll just take the shank out of my side, or I can't because you snap the handle. You know what you're doing in here. Prison rules. But
anyway, there's plenty to be.
He'll get you.
There's plenty to be done with it, and there's hopefully some things with the data and understanding a bit more about Go Value that I'm going to be doing later on this year in terms of producing stuff with it. So watch this space.
That's exciting to hear. That's cool. All right. Well, that's great. On that note, then let's, I think that's great. We'll see how that plays out, and looking forward to it for sure. All right. Well, look, guys, I appreciate all y'all. Thank you today for being here on Off the Market Forever. This was a great show to kick off this year. We'll have more of these coming, so everybody knows. And again, not hard to find us. Hit us up, good, bad, ugly, or whatever. And I will say to the audience, thank you guys so much for tuning in. I say it on every show. Without you, there's no us. So thank you for tuning in, for being a part of what we're doing. We're going to keep doing what we do and hope to see you back here soon. And I think that's about it. We'll see you soon here on Off the Market Forever on DomainSherpa, where all roads lead to domains. Peace out, y'all. And fly, Eagles, fly. Let's go.